Diversification away from the dollar. Declining confidence in USD dominance. Although the US dollar remains the world's dominant reserve currency, confidence in its long-term exclusivity has clearly weakened. In recent years, trade tensions, sanctions policies, and broader geopolitical conflicts have highlighted the risks of relying too heavily on a single currency system. The increasing use of financial sanctions and the so-called weaponization of finance have raised concerns among reserve managers about concentration risk. As a result, many central banks have begun to question whether traditional dollar-heavy reserve portfolios still provide sufficient protection in a more politically fragmented global environment. Diversification is no longer viewed as optional, it has become a strategic necessity. Why gold fits the role. Gold fits naturally into this diversification process because it is neutral and globally recognized. Unlike reserve currencies, gold is not issued by any government and does not depend on the policies of a single country or institution. It has historically performed well during periods of systemic stress and financial disruption. Rather than replacing other reserve assets, gold complements them by providing balance and resilience when currency-based assets face pressure. A structural portfolio shift. This move toward gold represents a long-term rebalancing of reserve portfolios, not a short-term response to price movements. Coordinated across many central banks and reinforced by official surveys, reserve strategies are being fundamentally rewritten for a more uncertain world.